learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it. All right, ladies and gentlemen, I hope you're having a wonderful weekend. I wanted to talk about the Robinhood account and, well, really turning a small account into a large account. This was at like $300. We clipped 9,000. I wanted to go over it, even the whole strategy. We even took it from 100. It was really cool, and I'm sure a lot of people had questions. It's been growing on stream and like going over the strategy of how we did that, but I figured I'd give you something better. Instead of telling you what to do, I want to go over 30 things that I learned not to do. So I'm going to be talking to myself here. I mean, this is just what I've learned. Don't take this as direct advice or anything. If you guys don't know, option trading is streamers. You can lose almost every financial investment. Please hold financial education on purpose only. Thank you. Have a wonderful day. But in all seriousness, there's a lot of guys coming in here new, and you guys are learning because if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning on Monday through Friday. But we're doing all of these trades live, so every single thing is live. We got even a new setup, so I have multiple accounts. We're going through trading. You can see every single thing that we're doing. It's all options trading. However, there is stocks too. Even in this big account here, we got some dividend stocks. Where is it? See, there you go. My 100 shares at Abby Vibe, baby, and some Snapchat in there too. So it's just overall investing, and option trading is great. It is extremely risky, but there's a lot of cool stuff that you could do, and you could make some moves, and it's great to even hedge an account too with the long term. So we have a bunch of videos on this channel. Make sure you come and watch us live. You can see everything on stream. There's follow-up videos. If you have to stay at home, you're on self-quarantine, then you could come in and, well, take all of this material and use it. So if you guys want to go through all the plays, again, we have the nightly watch list too. You could come see it on stream. All of these plays have been documented. So again, my main point with all of this, I want to focus on what not to do with options. So let's begin. There's a lot of places that I could have started, but I think I'm going to start with number one here is don't trade weeklies. I've learned this in many different instances. Weeklies are beneficial, and at the same time, they're very harmful. But starting early on, even trading the small account, I've learned that the weeklies have usually been more harmful. The second thing I learned about that is that if I justify weeklies, I can if they're the next week out, or if I have 4 times as many plays with at least 1 to 2 months out of value. So coming to the Robinhood account, even this small one, you could see I don't have anything expiring this week. Even so I have stuff for April, these are a month out, and we got some Mays, and then I have a June, and then even a September. So this is a problem I've seen a lot of people make early on. I've made this mistake many times, and it's easy to fall back into it because the weeklies are very appealing, because the weeklies are the ones that offer these really, really cheap prices, and if something big happens and they hit, they make a lot of money. But even on that whole account that from a couple $100 to 6,000 right now, or 5,000, we were up at 10,000. I traded some weeklies, and again, in that situation, I made sure, I had way other plays. That's why I have Septembers and Mays, and I was going small out with them in terms of how much I was putting out. I think through the balance history I checked, I didn't spend more than like $200 or $300 on anything expiring within the week or next week. And I've also learned too, sometimes if you want to play the weekly, just literally go one extra week out. It's usually a little bit better. Again, that's what I've learned, at least for myself. And then another thing is 10% max of the portfolio. So even in this case, if I was going to use that other account, I wouldn't put more than, $500 into anything expiring in the week. However, this gets a little bit tricky because you can't underestimate how risky weeklies are. So if you're even on a bigger account like the Tasty Works here, this account was at the beginning of the month or in February, this was at $12,000, and now it's at $94,000. But the thing about this is like, do I really want to have 10% of my amount in weeklies? Again, all these are April 17th, UNH for March, even some of them now. This is going to come up, my bigger trades here. These are for June, September. That's a $6,000 trade. The Apple trade, we won't talk about that. This is the account. This is the trade that blew up the account initially. GLD 2000, that's for May. NOC January, literally 301 days on that contract. So different times. Again, it's just different risk reward. Sometimes to make to make the investment worthwhile, the short terms are great, but you want to get longer term. And then even then, as you can see, what I'm saying is, as far as cash that I'm putting out, on that big account, I don't know if I would want to even put out $9,000 in weeklies or even $4,000 in weeklies it's just not too appealing to me just because I understand really the risk and what could happen with that. The max justification I've ever given is at the very least 10%, but a good way to balance it if you do want to, speculate a little bit. I've learned that it makes sure I have other plays that are worth a lot more in value, or I have a 1-to-5 ratio pretty much between weeklies and non-weeklies. The next thing that I learned is don't trade anything you see on stream or in any videos on YouTube. They're extremely risky, but even in this case, you guys see this is mostly the stuff I've learned, and I'm just trying to give you guys stuff so you also understand, how you could adapt this. But this isn't a recommendation for anything. This is mainly I'm just documenting, again, what I've learned and my whole journey. I'm saying I'm making this play. You could learn a lot through the timing, and that's the whole point of this video here too. That's why I'm not telling you what to do. Trading is fairly easy. I know that's a kind of a misrepresentation, but not so much in the sense that it's not as difficult as you think. But that's why if you could really avoid what not to do, it'll be easy for it to click. So don't think you need to rely on it that way. And if you do see the stuff we do on stream, a good thing to do is paper trade them. And you could see the trades I make, and you could go paper trade them with fake money and see what my performance would be, what it would be like. And then if you're like, oh, he did this. I mean, if we wanted to adapt it, you could practice that all with fake money, and that's paper trading. So we have a video, it's Thinkorswim. It's called Thinkorswim Paper Money, but that it's through Thinkorswim. You could get the platform and trade on a real platform with simulation money. Best thing you could do, and don't skip it. That's what I've learned with coming into options. A lot of people want to get into options, but the problem is they move up and down so fast, and you could make a lot of money, but you could lose a lot of money. But a lot of people skip the paper trading, and that usually gives a problem. Another thing I learned is don't buy a put just because your call went down, and vice versa. Just because a call goes down doesn't mean you buy the put, or if you're in a position and it goes the other way, doesn't mean you buy the other side. You can still lose playing both sides. That's a question. People say, well, can you buy a put in a call and make money if it goes up or down? Yes, but if it doesn't go past a certain price and then factor in the break even of what you paid for that contract, you still can lose. So you can win, but you still can lose. But this is an easy way. I've seen a lot of people lose money on this early on starting out. I remember that. This is a common line of logic that comes up. So don't do that. The next thing I learned is scale in and don't buy all at once. So if the trade is less than $50, so if you're going to put in less than $50 on the trade in total, you could make it all in one trade. But now if you're going to spend $100, $200, $500, $1,000, $5,000, $4,000, do not put it all out at once. This is something a lot of people, again, if you learn how to do this, you're going to separate yourself from a lot of beginner traders, because this is what they do. They say, okay, this is the bet. They throw it in there. It's not like a horse race. It's not like blackjack. The prices are going to move. The prices are going to change, and you could build a position instead of always doing that. And that's what I do a lot of times. So even some of these bigger positions I'm holding, I'm putting in amounts that I'm willing to lose. We'll talk about that, but that's not the first order. Sometimes I did that today. I bought a position on NOC yesterday, and then I bought some more even today around the similar size, and I will be prepared to even buy more of other stuff, but it all just depends on, the trade itself. So if you're seeing a trade, don't just throw the initial amount you want to do it. Throw in 30%, then throw in the next 30% a day later, a week later, and go in from there. So then you could build a position, and then options move so much. Options will move 20, 50%. We're making 10,000, 30,000% gains that's very, very fast, but they'll also lose money fast. So this is how you protect against that. So find what you want to play, throw in a small play, and then watch that play over the days, get a hang of the prices, see how it values, know what to expect, and then gradually and gently, start going into a bigger position on that same play or not. But with that now, you need time. So that's the next thing. Don't day trade. That's what I learned, because I've made the most money off swing trading. I'm not day trading these. I focus on the importance of time. That's what you're paying for with the option. There's an expiration date. You're paying for the right for someone to buy or sell an option by a certain time and a certain day at a certain price. There's value in that, especially when prices move a lot. And that's why even in the marketplace right now, you were able to make a lot of money, and it cost a lot of money to play, and now it makes it more risky. Because the importance of time is, some people took it for granted, a few months ago, a few weeks, even a few years ago, because there was kind of, stability. But when there's instability, or you don't know what could happen with time, that makes things very, very valuable. So swing trading is the key because stocks can develop over a couple days, a couple weeks, and some of you guys will come up with theses. You'll see an article, this and that, or I saw this news. That will take slow baked news. It takes longer to digest. You're going to need time, but that's where it goes hand in hand. It allows you even to scale in. So the phrase you'll hear, I usually hold till in the money or expiration. That has to do with how much I'm putting in, but I like to, build a position over time and then hold it till it either becomes profitable, or if I'm not right and I see it's not a loser, I'll just let it sit there and ride it out till expiration. If anything pops and I get lucky, it'll come out the grave. But if not, our risk management should have accounted for that. So it's, you're either going to win or lose with options. And that's how I really see it on every single trade. You are literally either going to win or lose, and that's how I treat it. Very black and white. Another thing I learned is don't buy too far out of the money with too little time. So even buying far out of the money is bad, but if you buy with more time, it's at least a little bit better. If you're getting just the cheapest options on the chain, don't do that on the contracts that expire in a week or two. There's a reason why they're cheap, and there's a reason why they're there. It's not likely. You have to understand where options get their value from. So the big key there is just don't buy too far of the money with too little time. Again, 2 weeks is still too little time. A month is too little time. The further out of the money it is, so let's say you want to buy an option and it's 50% out of the money. 1 month is even crazy, at least 3-6 months. And even then, but we're in a weird marketplace right now. But a few years ago, saying a stock will just drop 50% even in 3 months, 6 months, that there's a reason why those contracts go cheap. It's not too likely. So the key is don't go for those small contracts that just because they're cheap, you're like, oh, it's cheap. If the stock goes down, I make money. If it goes down, that's not how options really work. So don't buy too far out of the money with too little time. The next thing, don't start with all of your money. Deposit your account monthly. So a lot of people are like, how much do I start with? I've learned this over time, and this is the key to my whole investment strategy with options, even stocks and buying long-term dividend stocks, all that, is you just make a budget. You say, I'm going to save this much amount of money. I'm going to put this much money aside, and that's what you do. That Robinhood account that we did, this was the whole point. I've said this before. I've even made videos on it. So overall, all time, we're up on the account, 324%, but it says overall I started with $1,200 because we made this account last February 2019, and what I would do is put $100 a month, literally, and what was going to happen, this is the nature of options, you'll understand, you're going to make a trade. Options are very, very risky. You could expose yourself to a little bit more risk, but we made the trade, we blew up the account, put another 100, blew it up. That's why every time it goes down 100, that's us depositing. We went back up a little bit, blew it up, and then finally we took it down to that last 100 at one point, and then we got that all the way up to 1,800 or 2,000. It was crazy. And then we came down and we blew that up again. So then as it started going down, we added another 100, added another 100, added another 100, and then that final $100 was enough to take us here. And that was over the span of 13 months. So don't start with all of your money. This should prove the point extremely well, because how many people literally wanted to start with $1,200? That's what that account was that you were just looking at. So instead of starting with $1,200, why not, if you paper trade, you get some experience. If you're like, you could paper trade a little, you feel ready to take a trade, maybe you see an opportunity, there's an event, spreads in events, but if you see a big event, you're like, okay, let me try something. You could throw out $50, you could throw out $20 on 5 different plays, or $50 on one play, or $100 on even one play if you wanted. And after you've paper traded 4 or 5 trades, you see what I'm saying? Hopefully you're getting this system there. But a lot of people will start in with $1,200. They don't know much. They'll throw in $200 on one play, $300 on another play, and then they're like, oh wait, what? And then they'll blow that up just in a really fast time. I understand these are low probability plays. I understand what options could do. You could either make a lot of money or you could lose a lot of money, but there's extreme leverage and there's extreme opportunity. But I'm not naive to that. That's why $100, I know what I could do with it. I put it in there and that's it. If I lose, I know I'm going to lose. And you've even seen me lose even on a decent size account. I've blown up many accounts. I'm not ashamed to say it, because this is usually how it's always played out, where all you need is a few big ones and then you got to maintain and keep it. And then, we'll talk about wiring out and all that. But what I'm trying to say is you are going to blow up an account. So if you're starting out with an amount of money, even the best of the best have blown it up. If I could take all these accounts, we've made over, just in the last month, over $250,000 with small accounts. But before that, we lost money. That's just the nature. You're going to run into losing plays. So the idea is don't put all of your money into them. The idea is stay alive. So when those plays do come up, you're still ready to go. But a little by little,
don't start with all your money. The next thing I learned is don't let your cash balance go lower than the amount you want in your account. So this is big, especially if you start hitting an option and you're winning. You're really going to get fooled with this on Robinhood. So this account is a bad example of that because I'm taking a lot bigger risk. Even today was a wild day. I lost $147, but then if I go to the bigger account, this account is, $133,000. I lost, 10 times that amount. But that doesn't make any sense because if you 10 times that $5,000 account, that would be 50. This account's 30 times bigger, but I'm not losing as much, so I'm losing dramatically more on the smaller account, and that has to do with the cash balance. So what I'm saying is now on any brokerage, any platform, the same thing even goes for the Tastyworks. Whatever your account's out while you're holding options, you have to understand they could go to zero. They're extremely risky. You could lose all of your money. This is a big mistake I've made at many times. I've learned this directly because I've had opportunities. I've been up a lot of money and I'm like, wait, and then I would hold too much. Or once the key, with especially my strategy that I use and how much I play, as you see here now, we got all the marches ready. We don't have any too much. It's just a few solid good plays in there working for us. But I've learned that with all of these different plays, it's easy to lose track of, and I have lost track of them before. So the key I look for, and then I treat it like a zero-sum game because I know what these options could do. Any amount I don't want to walk away less with, I look at my cash balance. So on Robinhood, E-Trade, Thinkorswim, whatever, if you're in positions and your net account value is at like 100,000 or 10,000 or 5,000, go look at how much cash you have available because that is going to be, if all else fails, and it could turn around really quick. That's how much you're going to walk away with. Whatever amount you want to keep, make sure you have that much in cash. That's something. So even on the Tastyworks, we brought this up from $12,000 to $90,000. I'm saying I want to keep $40,000 of it. So I said at least I want 40 to 50. That way I'm up like what? 4 or 5 times on the account. That's good enough for me. I'm keeping 80 in the other one. That's good. I have these open positions. I'm willing to take those in this instance. And that's given the market climate here. So don't let the cash balance go lower than you want. Next thing, don't buy weed stocks. Believe me, wait till you see it's actually federally legal. This just comes up too many times, and I think it's very important. I've learned don't buy weed stocks, and I didn't learn this just now. I learned this in 2014. I have a video on it. I made a lot of money on the 2014 weed bubble. It's the same exact pattern repeating. You got to wait for a little bit. So yeah, don't buy ACB. Another thing I learned that I deal with all the time is don't get mad if you sell too early. This one's hard, but at the same time, this is where it really gets, it'll mess with you here, especially when you're starting out, because if you bring that into the next trade, the point is you have to realize be adequate with building your account. Just treat it like a leveling up, stacking one brick on top of the other. If it's profit, it's profit. But, I use a different strategy. I like to ride out some of these contracts, but it gets to a point where you have to, again, just keep in mind your cash balance. So if you're making plays and they're hitting, and especially, if they're doing the 1-to-5 ratio, I try to spend a small amount of money. So $20, if it I go for a 1-to-5 ratio. So if I hit it, it'll turn into $100. If I miss it, I only lose $20. So I only have to hit 1 out of every 5 plays to break even. If I hit 2 out of 5 plays, I'm up 100%. Or I'm up 500%. So that's pretty much what I've always done. And now as the account balance is going up, I am scaling it a little bit, and I'm just doing that instead of $200 now. I'm putting, or $20, I'm putting $2,000, but it's the same exact logic there. Now, 1 out of every 5 hits, I will make $20,000. But if I lose, I will go, I have to lose 5 big plays in a row for that not to work. But that's another thing too. I'm doing that with the money here. However, it always, you don't have to use that much money. If you're like, well, I have $2,000. Don't use your whole account like that. We will talk about that, but don't get too mad if you sell early. This will mess with you, and it's okay. The key is as long as you're walking away with cash and that cash account balance is slowly increasing month after month, quarter after quarter. Even just look at it even on a 6 to 12 month basis. Some of you are just micromanaging it, so that's why you're getting mad at every single one, and then you're bringing it into the next one. So just be wise with that. But there's that. The next thing I learned is don't play the same company in the same week. So if I'm trading the weeklies or even the monthlies, sometimes what I've learned is that if I sell a company and I trade it, and then I sell out, and then I try to, even if you can roll over, there's strategy with that, but I've learned that even if I go buy another option, even if I roll over to a cheaper out the money or anything else, sometimes it works in my favor if it keeps going down. It has to really keep going down, but the premiums are already so elevated, it's harder to make out money and you're pretty much buying in the same thing. So I did that even with Boeing. You guys have seen me do that many times. That's why I miss out, because I'll sell out of it and then I won't get back into it because I don't like to play it the same week just because of what that does to the option chain. So that's a good one. Another thing I've learned is don't chase a play with a large amount. So if you're using $50 or less, it's like, okay, you could kind of chase it because of the smaller amount you put in. And then that's the best part. It's like, if you really wanted to chase it, you could throw $50, $70 at it, because then that way, even if it has a premium, you're keeping it low. This is what I would do, because I'm like, damn, the option's up 300-400% over the last few days, especially in this environment. Well, I was like, I could throw $50, I could throw $100, get my hand in there, and then we could go from there. But if it's a larger amount, some of the bigger trades, I've learned not to put, try to chase those. Even a larger amount, 10-20% on like $1,000, $2,000 position, it's a lot more. So I don't like that. So there's more risk in that. The next thing is don't sell premium if you don't understand what a put and call represents, because then there's factors like X dividend, what you're forced to give. If you don't understand that, even the ghetto spread, especially in this environment, we've heard it even with like the ghetto spreads, even just understand what you're buying. And that is the key that you really, really need to understand. When you have that understanding of, okay, this is what a call is, this is what a put, I'm agreeing to do this, somebody's agreeing to do that, I'm getting money for this is my max risk. Once you know that, like second nature, then you could do into it. It may seem intimidating, it may seem like don't do it, but the point is don't do it until you know. So what you do is you go and start learning that now, and then go back, reference the paper trading. The next thing I learned is that nothing changes when you get over 25K. One, we're already doing swing trading. All these swing trading, I'm trading the exact same way, regardless of any of the accounts, regardless of the price, because I just look at the balance. All I'm using is risk management, making sure I'm keeping my money and how much I'm outlaying versus the risk to reward 1 to 5. But I'm not, changing anything up. So a lot of you guys think you got to get 25,000. I could day trade. It even violates the other thing I said. You don't even want to day trade with these options. So nothing's going to change when you get 25K. The point is, what got you to 25K should sustain you after 25K. And if you're going to do something that got you all the way to 25K and then change it up, that kind of defeats the whole purpose. So be wise about that, but understand you have what you need. Start using what you got, a little bit amount of money, space it out. Again, that $1,200 from last year, it's already at 5,000. We already got it to 10,000. Who knows? Maybe we'll take it to 25,000, but nothing still changes. You don't need to day trade to make good trades. So there's that. Next thing is don't flex your gains. And why? How it makes people feel. You want to be humble, and that's what it is. But I've learned this for myself because I have flexed my gains in the past. Some people say this stuff I'm doing is flexing, but I try to make it educational. At least I'm trying to, I'm giving you 30 reasons, in a video written out. I'm trying to explain to you what I've learned through all of these processes. So it's not as if I'm just posting, my balance. Like this is some good flex material. You know what I'm saying? Like, yeah, if I really wanted to, this could come to you in a different context. I'm like, yeah, $100,000, we did this play. Oh man, we did like, there's, but the point is, and this is, and I think it stands by what I'm doing is that I show you guys this, but why I say don't flex? Because what happened is like, I've showed people when the account dropped. I showed people when it went up. I showed people when it went down. I've been showing people this, but now why I've learned this, and even maybe that you could apply this to your life, you have to think about it in the sense of how is it going to make you feel and your friends and family or people around you when you're showing it. It's going to add a lot of pressure because then you're going to make a trade. It works out for you. People doubted you, and maybe you do get a hang of it. In a few months, you're doing great, but then you start showing people or you're talking down on people, and then you come through a rough streak, which inevitably you will. Everybody goes through a bad time in life. I don't care who you are. I'm going well beyond even talking trading at this point, but it will have an emotional effect when you go through your rough spot. It will have an emotional effect because now if you were showing it off, or again, you're getting extreme value from, you're like, oh, wow, this is this. And then you're letting it, it's okay to get excited. I'm not saying, and it's okay to be proud of yourself, and it's just a cool feat. And it's great when light bulbs start going off and you do unlock the potential. And there's nothing wrong with that. What I'm saying and what I've learned for myself personally is that it just adds a lot of noise, and I don't like dealing with the noise. I don't have to, I'm already worrying about the money, the trades, everything else. The last thing I want to worry about is how other people are going to feel about it, in the sense of, or this person doesn't believe with me, and that's it. And in that same respect, I stopped trying to prove things to people too, and that those kind of go hand in hand. So I've learned that. I think this is actually, very important, and I think it's more important than people realize. So that's one thing I learned. And then another thing is I've also learned, and this goes hand in hand with not flexing, is just don't determine if this will be your new source of income until you've been doing it for at least 3 months. Until you really got a hang of it. It's just like training at anything else. And again, it goes into the whole don't flex thing, because if you truly understand how option trading is going to work, just as we're explaining here, you understand that there is going to be losses, and this is what happens, especially if you're trading on an extremely risky strategy, and this is the same strategy that could produce results like this. And what I mean by that is just 1,000% bigger, fatter plays. You will not get these results if you trade you get it. So I understand that. So that way, knowing that and actually experiencing the highs and lows and spending months, the more time you spend, you will get and grasp a reality. So you'll be quick to not only flex it, but you'll also be quick to make other decisions like, okay, I think I'm going to quit my job. I think I'm going to do this. Don't determine that yet till you've been in the game, wait until your first rough patch. And then once you've gone through a good patch, a medium patch, and a rough patch, then you could start saying, okay, I think I want to pursue this in this capacity. The next thing I've learned, and I've learned this one, I've spent many, many years trading, many years on the internet, is I've learned don't get caught up with too much strategies or news. We're focusing on what to do here for a reason. That's what I'm saying. You once you figure out what not to do, it's easy to get on a right track. And what I'm saying with this is I don't get too caught up with too many strategies. I've been doing the same thing I've been doing for a while. However, don't be closed-minded, and that's something we'll talk about, because you have to be open to some things at the same time or be willing to adjust. But the key here is cutting things out. I think everybody tries to do too much. My goal is cutting things out all of the time. That's how good companies are even ran. You cut the fat. You guys got to cut the things out from your life that aren't producing, the real results, or that are really, really helping with it. And it's very easy to get caught up, chasing a new strategy. 3 months later, you're on this. 6 months later, you're on this. You're getting blown with every toss and turn of the wind. You got to find something. And again, that's why risk management, little amounts of money at a time, building up, primarily a long-term while trading on the side with options, working a job and treating this as supplemental income, going about it in a way that, really isn't outside the realm of a savings account on crack. That strategy is tried, tested, and true. Literally, it's saying, be invested in the market, and then you could put, 5-10% of your portfolio towards riskier assets. That's very, very normal. So be careful overloading yourself with news and strategies and ways to do things. You see, that's again, I'm not, I know I have videos here. I even said it a lot, what to do. It could all get confusing. Big hack is just know what not to do. That's it. Along that note, I've also learned don't focus on the market all the time. Get outside, get a hobby, look at other things. Hours in doesn't equate hours out. I could almost guarantee, I've done this for a long part of my life, most of my life, but I've never been like crazy addicted after this. After the watch list, after the stream, I barely even look at the market. I get news updates. I'm aware. I'm in touch with stuff, but I have hobbies. I like to read the news. I like to read the Bible. That's a big hobby of mine. I like to pray or meditate, whatever you want to call it. I watch TV. I like Netflix. Yeah, I like Xbox every now and then. Wish League of Legends wasn't 45 minutes a game, but but it doesn't matter how much time you put in the market. A lot of people, again, and look at the above reasons. They're flexing on people. They have to keep up with the image. They're trying to make people think this is that, I have to prove everybody that, that I'm not dumb, that I'm putting this much time in for a reason. It's not for nothing. Then they think it's going to be their new job. There's a lot of pressure. So they think that the more, time they spend on the screen, looking at charts, looking at news, writing stuff down. I'm not saying that stuff doesn't help. And it's not like I haven't studied. It's not like I've gone through periods of that in certain, moments demand more of my attention. However, more often than not, I'm on a schedule. I keep a pretty tight schedule, but at the same time, a part of it is making sure I do step away from all this stuff, because more isn't always helpful. And I see a lot of people. Going crazy and really, really trying really hard. You want to figure this out. And again, you have some learning to catch up with if you're just starting. That's fine. But a little bit at a time consistently for the rest of your life moving forward, believe me, it's going to add up. So don't, slow it down. Again, take off this burden to make money. Take off this burden to keep up with people or anything. Go slow and let it come to you, and you'll learn over time. But, it's going to suck the joy out of this. I enjoy the videos. I enjoy the market, because I also enjoy other things. So that's why, it is new and refreshing for me every single time I look at it. The money's cool. There's a lot of great things, but I love the world as well too. I love seeing what's happening. I'm into that stuff. So get another hobby. Get something else to do. Another thing now in line with all this, I learned don't act out of character. All right, man, you don't drop hundreds and thousands of dollars like that, my guy. Neither do I. If you really know me, I do. I do when it comes to certain things. But if you also know me, I'm very, very cheap. So you need to chill, bro. That's it. I spent $40 on the same Jordan shirts or Jordan shorts I'm wearing now. I got those in high school. Why am I saying all this? Because how much do you typically spend in a day or a week? That is a good gauge to use for what you should be trading with, but like every single individual trade. So I'm saying don't act out of character. Some of you guys are dropping $300 on a trade. You haven't spent $300 on anything this week, exclude the necessities, but you could even factor in the necessities. And this is a big problem when it comes to options, especially because options is different than stocks. You see people say you need a lot of money for stocks. People put a lot of money into stocks, and that's true. But stocks are more safer in the sense that it takes a big market crash, bigger than the faster move down than the Great Depression for people to lose 30%. That's relatively stable. You can't forget that. But options, it's a whole different story. So don't act out of character. Use an amount and just take a look. You're actually buying something. You're actually spending that money. Get used to an amount that you're familiar with and that you normally, you would be comfortable spending and that you normally do. I don't spend money on clothes, but I'll spend money on a house. I do like nice cars, but I've gone over that. I've even changed, that I don't have as many nice cars. I don't want to buy even more nice cars like I used to when I was younger. But, I'll still drop, 100, 200 on a nice car. I'll drop 500, $1 million on a house. And to some of you, that may sound crazy. Some of you are like, oh, I wish I had that amount when you get there. You're going to get to that point, but, keep your expenses the same. And over time, as you, live and acquire skills and keep learning as you are now and stay invested in the market, your expenses will remain flat and your income is going to skyrocket. That is the goal, and that is what you want to do. And now there's another part of you, and now you guys can say that, some of you do have money like that. You do have rental properties. You do have money and you're still learning and trading options. Same thing applies for you. What do you actually spend on normal stuff and use that as a gauge. If you're like, well, I have all this money, I want to make trades, but you're like, oh, I don't want to start that small. I still think you should start small, but your normal expenses and how much you save, again, this is like your savings account. Just you get this relative all to your income. And that is a way you can make a lot of the strategy I do even kind of universal if you do it relative to your income size. The next thing I learned is not to let someone else's actions dictate your trade. It's an interesting phenomena where someone who has millions of dollars can get affected by the memeing, I don't know if that's a word, of a stock. And literally, even like Elon Musk, even like I said, some of you, there's a lot of you guys who have good money. You watching the stream, you paying attention, man. And I'll see some of those guys get shooken up on a position it could still affect them, even if they read it by what an 18-year-old has to say, pumping or bashing a stock. It's wild, but that's how it is in the stock market. So stick with the plan. Know what you want to do. Just say, this is what I'm going to do. This is what I got to do. This is it. And that's it. Other people will say stuff. You could take it into consideration, but don't let that change your plan. That's something big that I've learned, even with all the comments, the live stream, everything. Having this on lock, just knowing not to do that is very, very key. Another thing I said earlier is just don't be closed-minded. This is something I even constantly work on because I'm telling you a video of what not to do. Well, isn't that saying close your mind? Well, that's it. Everything here, this is just economics. It all depends. Situations change. You have to be flexible, but it is knowing the places where there is extreme error. But at the same time, things could change. Be open to adjustment, or more so be open to adapting. But at the same time, adaptation isn't constant changing all the time or making, drastic changes. 180, I'm going to go from this to that. It's adapting. I never played GLD, I adapted. It's not like I said, like don't play paper gold. That wouldn't come up on this list, but I didn't necessarily do that all the time. I've talked bad about it. I said I wouldn't trade it. I own physical gold, but recently I've been turned on to the paper gold. So there's certain plays that even recently I have, and that's because things are changing. I don't want to be too close-minded right now. And then even on that note, don't be intimidated. This is very easy. Like I said, even though it's still complex, it's still easy. And again, what I mean by that, not difficult to get started with. And sadly, there's really people not as bright as you doing it already. So don't be intimidated. You have what it takes. You just got to, go after it. That's what I'm saying. paper trade, get knowledge. You have the stream, you have the videos, but paper trade, take your time, use a little bit amount of money. I mean, it's just pretty good action plan. You don't have to be intimidated, and the more you learn, you'll be less intimidated and you'll be able to know what you'll do, but you could do it. Don't quit. This is easy. It's not out of your reach. I firmly believe that for almost anybody, as long, some people it's going to take longer than others. Some concepts are going to click better than others for some people. That's it. So don't be intimidated, and, take the proper steps that will help you not get intimidated, and that won't put you in a traumatic situation where, you were like, you weren't intimidated, then you ran into a wall, you got in an accident, then it might make you intimidated again, like people with driving, So be cautious, and, let's give yourself less reasons to be intimidated. But overall, have no fear, my friend. The next thing, don't get caught up with meanings, get caught up with understanding. This happens a lot in the stock market world. One of the top things I hate, and I've learned this very, very quickly, it doesn't matter with the words. Some people will say stuff, they'll use all these terminology, and I'll be like, wait, what does that mean? What's this? Somebody will say like HV, I don't know what that means. I'm not caught up with terminology. I'm just caught up with the understanding of what it is. Like I said, understand a call and a put. What is the right to buy? What does it mean? Who are the parties involved? What is the price? What needs to happen for this? That's it. Get caught up with understanding what you're doing, understanding why prices can move, how you're dealing with open actors and people facilitating stuff. But don't get too caught up with terminology, especially using terminology if you don't know it. That's what happens. Like Robinhood says, do you think the stocks are going to go up? Put you to call. If you think the stock's going to go down, go to put. That's part of the meaning. But instead of getting caught up with the terms and reciting the terms, really understand what it is and what it is representing. The next thing is, don't treat it so serious. And what I mean by this is, be a competitor. This is how I feel about it. This is something I've even learned. But don't be too competitive. Focus on what needs to get done and not winning. That's the big key a lot of people miss. And you could tell really who's a real businessman when it comes down to that is, I just want things to get done. I want the account to grow. I want this. I want to be protected. It's simple as that. I don't care about winning. I don't care about being better than you. If you're better than this person, proving somebody this right or wrong. And again, that's where the terminology, some people get really serious with terminology and all this stuff. But it's just like, I could compete, and I believe you can too, but I don't have to be too competitive, because again, what I'm saying is I'm doing what I need to do, but I'm focusing on my own work. I'm not looking to the left and right of me. I'm not looking to anything else in that sense. I'm looking at what needs to get done, what I'm trying to accomplish, and my own work. That's it. It's not about winning. And it's the same thing with the play. It's like, well, you want to make sure the cash balance stays high, the account value stays high. It doesn't matter how we get there. Like, I don't care if I lose on a play. I don't care if I lose this, that. Get the job done. And you don't always have to win to get the job done. And I think, sometimes I'll sacrifice winning to get the job done. The next thing I've learned is, don't cut losses, LOL. Because this is a very weird one for a lot of people. Right off the bat, you'd be like, well, what? I mean, it's pretty bad advice, but that's assuming you're only putting in what you wanted to lose. But the simple way to discuss this with options is, if you're going to cut a $1,000 position at 50% and you're going to lose $500, just put in $500 and then write it till expiration or in the money. So if you end up losing on it, so then when you're down 50%, you're like, should I cut it? No, just hold it. If it goes down more, you're down 500. That's what you would have done with the 1K position, but you would have cut it out. But now that contract should have, if you listen to some of the other stuff, or as I've listened to myself, I've learned that I still have time, and they could actually come out the grave, and, especially in volatile markets, anything could happen. So I've learned, don't cut the losses, but more or less just control the position. The next thing too, that being said, don't put $1,000 into a weekly or even large amounts of money with little time. It kind of goes to that first thing. But that being said too, just because, saying, okay, well, don't do this. I'm putting in how much I want. I'm okay with losing this much. If you're new, if you don't understand it, again, go back to don't act out of character with the income. Don't put $1,000 into a weekly. The longer amount of time you could justify more money. That's what I've been doing. That's what I've been justifying it as. But for the most part, $1,000 into a contract with less than a month of time is usually a bad idea. Next, I've learned, don't focus on making money. Focus on protecting and staying alive. That last Robinhood account, I showed you it. It looks like up and down. People say, oh, you get lucky, this and that. Well, we've done it many times. I don't care. Doesn't matter what you would have to say, because I got the job done. That's all. My goal was what? Protecting and staying alive. Did I protect? Yeah. Well, I lost money, but it was only $100 at once. My whole army was never deployed. And then once we got steam and we were able to gain soldiers, I sent them out to a very, very aggressive war. We had to pull back for a little bit. We got a little bit hesitant. We lasted, and then we put them on the final push. I lost the additional soldiers, but I still had troops ready to go, and we put the money in, lost. But again, still protected that, you could look at it individually month over month, and that it's funny because that will make some people say, oh, this and that, but I'm just looking at the starting amount, my initial 1,200 soldiers. I just deployed them over different times, and the whole idea was I stayed protected. I wasn't focusing on making money and throwing in $1,200 at a time. No, the idea was getting protected, little amounts of money to make large amounts of money. That could go a really, really long way, and that's exactly what we did. My goal was focusing on making the money and staying alive. Very, 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 very simple. But finally, your last tip, number 30, don't quit. That's even what that account showed. That's something I always preach. Again, I tell you not to go so fast, and these tips are there, and I've learned these tips myself. Again, this is just what I've learned, and hopefully you see I haven't quit regardless. I mean, I've been trading for most of my life at this point, more than half. Never quit. Doesn't matter. You go down. This is a plan. This is a foolproof plan. With that $100 a month thing, you could literally, if you have $1,200, you could trade every single month for the next year, as long as you just don't quit, don't get discouraged, act out of character, and then drop $1,000, 500, trying to make it up. Just treat this very, very simple. Again, don't take it too seriously. Treat it for what it is, and that's it. But don't quit. If you give up, that's the only way you get defeat. Even cutting losses too, right? But stay in the game. There's gonna be ups and downs. Again, everyone's gonna have a rough spot. Don't quit, especially during the rough ones, just because you're gonna have to maybe tone things down, but or stick to something. Again, I think what I've outlined here, and even how I've always traded, I've just kept it. Is it reasonable? I think just keep it reasonable. Don't be unreasonable with your budget, your lifestyle, your real income, all that. But make it out through that rough patch, because your time is going to come. Most people quit right before it gets gold. I could only imagine. And it's not always going to play how you expect it to play out, but you never know what is going to happen. Even then, imagine taking it, we blew up the account. I could have been depressed here, could have been sad, but then right then we hit it with the last 100. But then after I lost all that money, I could have been disappointed. Imagine 3 more months later of just losing, and then 4 months later of losing. But it was then that final $100, that final 178 was enough to take us to the promised land. But now we got to keep it too, so we'll see what happens. But that's pretty much it, ladies and gentlemen. I hope you guys enjoy this video. We're almost at 100,000 subs, so thank you. This is my little gift to you if you made it this far. I appreciate it. Hopefully we see you on stream, and hopefully we catch you on the watch list, and hopefully you have a blessed day, and hopefully you take the last thing I learned not to do and just don't ever quit. And I wish you the best of luck with your trading, and you will get it, and you don't need anybody. You'll get it eventually. Just be reasonable, be wise, focus on, listen to Warren Buffett, Intelligent Investor, read Strangest Secret in the World and Richest Man in Babylon, and you're going to get it. Just don't give up, and don't take it as seriously. This isn't going to be a make it or break it. It's a really good opportunity, and make sure, options trading without a long-term portfolio is a waste. Start your long-term portfolio first, especially even in this market. You got an opportunity, and then start trading. So I love you all. I'll see you on stream. Let's go.